Okay, so for the sake of time, we'll go ahead and get started. Thank you, everyone, for joining us today. If you don't know me, my name is Ada Bobbitt, and I serve on the Venture Forward team at United Way. And so we are just so grateful that you have chosen to spend your 10 o'clock hour on a Thursday with us. But before we get started with our key conversation for today, I wanted to hand the conversation over to Jeff Milner from the Enterprise Center, and he is going to share about their new resiliency toolkit. So Jeff, thanks for joining us this morning.
Ada, thanks so much for giving us the opportunity just to talk about this tool for a couple seconds, which we hope is sort of germane to the conversation to follow. The Enterprise Center worked closely with the United Way and the Chamber and other organizations through the small business pandemic response early on and have continued to provide those supports. One of the things that we heard, during that first round of PPP was how challenging just getting all of the paperwork together is. So I'm dropping a link in the chat, which you can also access at resiliencychecklist.org. This is not designed to accomplish everything, but we hope it is a really productive way for small business owners, nonprofits, faith-based organizations to kind of conduct a self-audit, and then a useful tool for our partner organizations as these folks move between you to get different services, to have some common language, some understanding of what might be a challenge, what resources folks are looking for. We link to a number of the different partners in Chattanooga. Really, it is designed to be a slightly tailored checklist. You go through, you answer a couple questions, and then we'll give you some vetted resources that you can access to do things like complete PPP. We've added a section on that. I'll add to it that we're really, really interested in feedback at the moment. This is an evolving thing. So as you use it, please share your feedback. If you'd like to be featured, if you've checked it out yet, you can see we've got a lot of local businesses and nonprofits that we're highlighting on the front page. Anything like that, we'd love your feedback. In addition to, if you feel this could be helpful to the folks you're working with or to you in your organization, please, it is open source, freely available to anyone in our community and outside of it. And I'll plug very quickly, next Tuesday at 4 p.m., and I'll drop a link for this. We're going to have a webinar with a resiliency expert out of Atlanta and Charlotte, as well as some of our community partners talking about other resources that are available in Chattanooga and Hamilton County. So that's that. Ada, United Way Venture, thank you so much. I appreciate it.
Thank you, Jeff. And we will make sure to get that link to the resiliency toolkit out in our follow-up email. So be sure to look out for that if you didn't take note of it in the chat. Well, with that, we will go ahead and kick off the main topic for today's conversation. So you are here because you want to hear some updates on the Paycheck Protection Program, and we have some wonderful community partners, Kenny Dyer from Pinnacle Financial Partners and Jim Catanzaro from Chambliss Law here to share with us. And so the way the conversation today will work is they are both going to share some updates. And as you have questions, we ask that you put them in the chat. And then after they are both done sharing, we will have time to ask those questions. So I'll be collecting those in from the chat. And then at the end, we will make sure to ask those questions. But without further ado, I'll hand it over to both Kenny and Jim. Thank you both so much for joining us. We really appreciate you taking the time to share.
Thank you, Ada. Thank you for giving us the opportunity to be here today. And I'm not sure everybody wants to, you said to turn on your picture. Not everybody wants to see my picture, but I'm here anyway. But there's been an enormous amount of change in what we call interim final rulings. We've always thought from the SBA, we always thought that's a kind of an oxymoron because the interim final rulings are, we've had a plethora of those come out. There's a lot of things going on right now with the PPP program. Obviously, the forgiveness is on everybody's top of mind, but what's really going on very heavily right now is the PPP2. I'm going to let Jim start and talk a little bit about the new rules that came out about some of the forgiveness, and I may add in some stuff, and then both of us will talk again about the PPP2 program, and then we'll have questions and answers. Jim, you want to go ahead?
Sure do. Thanks, Kenny. Yeah, good bit of activity. Just to sort of recap and get everybody up to speed, in case you're not already, on December 27, the PPP program, which was scheduled to sunset on the 31st, was essentially re-upped through the end of March. And in the course of doing that, there are basically two things that occurred. First was, as Kenny mentioned, we have now a new program which allows folks to apply for PPP loans for the first time or to come back through for a second draw. And then we also have some new rules around forgiveness, or at least some clarifications that help clarify that process. And as we all know, depending on the form that you use, and we'll go through that in a minute, there can be many questions and many ambiguities. So we're going to try today to touch upon some high points, talk a little bit about where forgiveness is now, and then as Kenny mentioned, also address what's the new program look like, and what might be the eligibility to participate. And then we'll wrap that back around by coming to your specific questions that are queued up in the chat. And I guess for our purposes, Ada, are you going to moderate that chat so that we'll get those questions teed up to us, or are we going to be reading those?
I'll moderate those.
Thank you.
You're welcome.
All right. Well, let's just start, Kenny. I'm going to run back through forgiveness just a little bit here, kind of high level. So as everyone knows who's gotten a PPP loan, if your loan has not yet, if you've not applied for forgiveness, you need to, of course, and would have at this point, if you don't have a new PPP loan, you would have completed your covered period. And at the completion of the covered period, you essentially have a 10-month period in which to apply using one of three forms. And let's go over what those forms are, what the eligibility is to use those forms. And Kenny, I want you've got some real ground level experience with these, so I want you to jump in anywhere you see fit. The first form is the easiest. For those of you that secured loans of $50,000 or less, you can use the 3508S form. Very simple form. You don't have to account for a lot of the other things that borrowers do that obtain loans in excess of $50,000. For instance, you're not computing payroll costs, you're not computing FTE reductions, or worrying about wage reductions. If you can't qualify for the S, meaning you receive more in assistance than $50,000, then you've got a choice between the EZ or the full form. The EZ is basically available if you didn't reduce FTEs or wages or salaries of eligible employees more than 25%, or if you did have a reduction, it was because it was in response to a CDC or healthcare authority guidance about COVID health-related conditions that limited your ability to operate. You have one of those conditions, then you can use the EZ. The EZ allows you to avoid making the FTE calculations and wage reduction calculations. You are essentially focusing on payroll costs. If you're not able to utilize either one of those forms, of course, then you're using the long form 3508. And that does require quite a bit of work and calculations to be submitted, in which you're determining FTEs over your covered period, You're factoring in any wage reductions that are over 25%. You're applying exemptions to the extent that they apply, or if you can't qualify for an exemption, then you're figuring in the reductions that would apply to your forgiveness, and working through the sheet to make sure that you know exactly what your net number is that you can get for forgiveness. You're going to be working with your banker like Kenny pretty extensively to pull together your documentation so that you can get a clean and complete application that the bank can then take in and actually begin review. Kenny, do you want to add anything there?
Yeah, Jim, I will tell you, they came out the 19th, what was that, Monday night? The simplified return is for 150,000 and below.
That's right.
Yeah, that did come out. We actually got the form. I will tell you that you know, I can speak to our site, and I'm sure the other banks are very similar. When you go in and do the forgiveness, it will ask you some questions and walk you to the correct form. So that's helpful, so you don't have to think about it. But that was a big deal of the, you know, there was always talk of the 150,000 automatic forgiveness. It's not automatic forgiveness, but it's a lot easier. It's a one-page form for if you got 150 and less, and you answer some questions. You actually do not have to submit any information. Now, you do have to keep that information for 3 to 4 years because they could come back and audit you to make sure that what you told them was the correct. And you certify, it has some certifications on there, and it has made it a whole lot easier. And we just got that form, I guess it's Monday night. They came up that form, and we have loaded it in our system.
That's a great clarification. I appreciate that. Yeah, that's right. That up to that point, it had been 50,000 or less. Now it's 150,000 or less. Thanks for correcting me.
Yeah.
Over and above that, in terms of the, and I wish we sort of had an idea how many folks on here had loans in excess of $150,000. It'd be interesting to know. But without that knowledge, I will tell you that in terms of using the other forms and making the calculations, we'll go over that real briefly with you. You know, when you're figuring your payroll costs, remember you're using an average over whether it's determined during a covered period or if your payroll is at least biweekly or of greater frequency, you can elect an alternative payroll covered period. And so the difference between the two is that while the covered period begins on the date of funding of your loan, and then you count out the 24-week period from there, the alternative payroll covered period allows you for your payroll determination to start the covered period on the first date of your payroll. And the important distinction there is that we've gotten guidance that the payroll that you can include in your calculation are those that are incurred or paid. So for example, if the first payroll period picked up a portion or days in advance of the actual commencement of the covered period start date, you would be able to include that if it's paid inside the covered period. And on the back end, if you pay a payroll period that falls outside of the end of the covered period, say, for example, the end of the covered period was December 10th, and you paid for a period that picked up from December 7th through December 15th, you would be able to allocate the final period, the December 7th through the 10th, to the covered period, and include that as part of the expense that's eligible for forgiveness. That's some high level on the payroll side, and that of course applies to both the EZ and the long form. If you're using the long form, you're getting into the FTE calculations, and just a reminder there, you're using a 40-hour calculation there. So you're taking, for each of your employees, you're going to total up the number of hours they're paid for, and you'll divide that by 40, and then you'll round to the nearest 10th to come up with an FTE determination. And you're going to do that, average that for your covered period, and then compare it against a couple relevant periods. One is either February 15th through June 30th, 2019, or you'll compare it against January 1 of 20 through February 29 of 20. And the reason that you're going to do that is to the extent that you would reduce your FTEs or have a reduction in your average FTEs compared to one of those two periods, then you might need to recognize a reduction in the forgiveness that you're eligible for.
Yeah, Jim, that's very, very good information. That a couple of things that did change, and we actually had some issues with it. If any of you all happen to have gotten an EIDL loan, initially you had to subtract that out of your forgiveness. Then they came back with a new ruling says, no, you don't. You know, if you had already applied for forgiveness, you can go back and get that reconsidered, but you got to go back through the new process. That was one of the important things that changed at the last minute. Another one that changed is gone back and forth. You know, again, this is really for your accountant, and neither one of us are your accountants. But initially, you know, the issue was that you know, it first start off, well, is my PPP, you know, because it's a forgiven loan, is that taxable? Well, they came back and said, no, it's not taxable. Then initially the IRS said, okay, then you have to, you know, then your expenses can't be, you can't take those expenses that you use your PPP money to pay for. And the Congress came back and said, yes, you can. So you're getting the best of both worlds. Now, I will tell you from a banker standpoint, and when you deal with your banker, you're going to have two different types of financials this year, or the year in 19 or in 20, that you're going to have for tax purposes. You will not include that PPP money as income, and you will get to take those expenses. Then on your GAAP accounting financials that you give to the bank, the PPP money forgiveness will be recognized as other income. So it will be included in your GAAP financials, but in your tax, so therefore your tax financials and your GAAP financials will be different. And that's something that we are actually internally working our way through. You know, how do you meet your covenants if you've got some loans? Which one do you look at? Our position has been whatever you supply to us of your GAAP financials is what we're going to use. So that actually will help a lot of people in a lot of cases on their GAAP financials. But remember, your tax position will be different. That was a big deal that came through with the new change. You know, so far, you know, we've had a number of forgivenesses. I will tell you, in this market, you know, we did about 210 million, and we've had about 25% forgiven. And one of the questions, and we'll get to that later, we talk about PPP2, but you do not, and a lot of people misunderstanding of this, you do not have to be forgiven in order to apply for PPP2. You do not have to have submitted your forgiveness application to get it. What you do have to certify that you have spent your PPP money appropriately. In other words, for your salaries, expenses, et cetera. And that was a misconception, I think, from a lot of people on the front end. The thing that you know, again, on your forgiveness, they have, and Jim mentioned this about the 24-week, that was a big move to extend the covered period, because a lot of people were worried about spending that money in the 8-week period, and they extended that covered period to 24. You have the option to extend it to 24 weeks, which in most cases, that's going to be almost, you know, take care of your payroll. Well, you don't even have to use your expenses. It'll take care of your payroll. They did also change, you know, I think initially, Jim, it was 75% had to be on salaries, and now it's 60% and 40% on other things. And I think those are specific to PPP1. PPP2 are different. So we'll try not to be too confusing to you. But for PPP1, you have certain things you can spend your expenses on. But that was another big change that they made that was very, very helpful, I think, to the businesses. That's about all that I have on the forgiveness piece. Again, you're probably going to ask us some questions that Jim and I probably can't answer. And we've still got some interpretations that we don't know the answers to yet. But that's as far as the forgiveness piece goes that I have. Jim, have you got anything else on the forgiveness piece?
Yeah, I'll just sum up real quickly. As you mentioned, taking the 60% requirement, I think that's an important one to understand. The requirement is essentially when you go through the form 3508, whether it's the EZ or the regular form, you're going to multiply your payroll costs that you put in line 1 by 60%. And then that's going to be the amount that you're going to figure the resulting number then will drive what your ultimate forgiveness total is going to be. And that impacts, as Kenny said, the amount of non-payroll costs. But when they extended the covered period to 24 weeks, as Kenny mentioned, most, I would assume, if not all of you have spent probably almost all of your PPP. If you opted for the 24 weeks or got your loan after June 5th, then you would have spent it all probably, or most of it, on payroll costs, so that's not a major consideration anymore at this point. Those are some high level thoughts on forgiveness. We can come back to wage reductions if we need to. I think we saw the poll that was up and it looked like a significant number of you were under 150,000. So a lot of folks on here got some good news. Yeah. Which is, if you haven't submitted your application, your process is going to be significantly easier in 21. So with that, Ada, do you want to just cue us up some questions? And Kenny and I we can add where we can, and we can throw up our hands and say we don't know yet.
Right. Ada, I think probably good enough to have questions on forgiveness, and then we may go back into PPP2 in a minute and then ask if there's any questions about that. But I think for right now, are there any questions on forgiveness?
So I think right now we have questions around PPP2. And so if you have any comments around that, we'll wait and hold those questions until after you share.
Okay, I guess I'll start a little bit, Jim, if you don't care, and you fill in what I've left out. The PPP2 is a little different. You have to have that 25% reduction in revenue comparing a quarter of 19 versus a quarter of 20. Now, there's some exceptions to that. I may get into it if your business started during the year in June of 19. There's some differences there, but generally that's what it is. It has to have 300 or fewer employees. $2 million is the most. So therefore, it's going to be more applicable to smaller businesses, and I think that was the goal, and that is happening. We are, quite frankly, we are having almost 75–80% of our people who did PPP1 are doing PPP2, are making applications. We're doing a lot of those. Again, it goes back to, how much money can you get? It's those salary costs times 2.5%. It's your average monthly salary costs. There are different ways to figure that this time. I mean, you can take your 2019 salaries or your 2020 salaries divided by 12 times 2.5 to get how much money you can use. What in our case, and I say in our case, and I'm assuming a lot of those banks are the same, you can actually go into our portal this time. We have a link, and you go to our portal, and I think it is like every other bank. You put in your your previous SBA number, and it pulls up your information. So it's already there. You can actually still use and we've got your information on how much your amount was last time, and you can use that same amount. So you don't have to reinvent the wheel. You don't have to go in and do what we call a calculator to figure your amount that you can get. You can use the same amount. So it's very, very simple to get the PPP too. Again, the loan amounts are 2.5 times, with the exception of if you have a NAICS code of 72, star 72, those are hospitalities and restaurants, you can get 3.5 times, which we've had a ton of those already. And so that is a lot more money you can use. Again, the difference too is that you can use your money for a little different things. You can use them for supplier costs, essential to operations. You can use them for workers' protection expenses like PPE and COVID-19 costs. In other words, if you're a retailer and you're putting a screen up as you're checking out, you can use that. Can be an expense that you can use. Operational costs that include software, human resources, and accounting needs this time. So there's a lot more things you can spend the money on. But again, you can get that 24-week period. Again, I'll go back to what Jim said. I think 9 out of 10 times you're going to spend it all on salaries anyway. But we have had a lot of robust activity. That's just generally how the difference in PPP2 versus PPP1. Jim, I'll let you join in there.
Yeah, I don't know that I have a lot more to add, except I don't know if it's relevant to anybody that's participating today, but they've expanded some of the organizations that apply. And of course, originally, you only had specific types of nonprofits that would qualify. They now added C6 organizations that are not obviously professional sports leagues for obvious reasons. I don't know if any of you would qualify or have affiliates that are, but they also can qualify now for assistance. I just point that out.
Yes, I think, Ada, now if we've got any questions, we'll try to ask them about the PPP too.
Awesome. So we'll start with a question from Jean Hogarth, and she's asking, churches were eligible for the first round. Is this the case for the second round? I think you might have just answered that.
They are.
They are.
Perfect. And then Songbirds Foundation and a couple of others are asking, if you received PPP funding, do you know if you're able to reject it? Some of them are interested in applying for SVOG, and you can't accept both, but they don't want to miss the opportunity to apply for PPP if they don't qualify for SVOG.
I will tell you, we had some, even in PPP1, that returned the money very quickly. And so you can do that. And that would get you, say, off the books for the PPP money. But we did have some that did do that. Once there came out issues about, your need and the loan necessity form that you may have to fill out if you got a lot of money and over $2 million, or you could be for less. And a lot of people did return the money.
I'll just add there, I'm not sure for an SVOG what you need to show to demonstrate the return of the money. Just work with your banker, obviously, to make sure that you can document that.
Awesome. And at any point, if you feel like your question wasn't answered, please feel free to add something else in the chat or any clarifications, but we'll continue to move on. So we have a question. It says, in the eligibility requirements, it says, can demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Which quarter are we supposed to compare to?
Well, frankly, you could compare any of the quarters. I mean, you can compare quarter one with quarter one, quarter one 19, quarter one 20, quarter two with quarter two, quarter three with quarter three, quarter four with quarter four. So you can use any of them. Now, obviously, most people are going to use the second quarter to compare because that's when a lot of the shutdown occurred, et cetera, but not everybody. So you can use either one. And a good point that you made, we've had a lot of people have misinterpreted the difference between revenues and profits. And it's your revenues that have to drop 25%. Profits don't have anything to do with it. It's all about revenue. and there's some definitions of what revenue or receipts are and so forth. But basically, that's the money that you took in. Now, I don't want to get into the technicalities if you're on a cash basis or if on your accrual basis. The thing that you need to do is you just need to be consistent. You can use either one, but you just have to be consistent. I don't want to get too technical in this, but there are some companies that didn't start till, like, let's say June of 19, and they have a special rule where they can actually use a Q3 or Q4. That's June 19 is just an example of 19, and they can compare it to any of the other quarters of 20. But generally, if you were already in business, you have to compare like quarters.
Yeah, that's all great information. I think I'd only add, just stress, as Kenny did, you're talking about gross receipts. And so there is a definition of that term. It's more expansive. There are probably going to be more that we get from the government around that concept as we start comparing quarters. So just be aware as you work with your CPA firm and your banker, they'll be aware too, obviously, of those guidances and can help you guide, get you through that process. So you're using the correct numbers and making sure you properly qualify.
Awesome. Thank you. And I believe we had a similar question. And so, Angela, if that did not answer your question, please just let me know. We'll make sure to ask yours, because I think they were asking similar things. But we do have a question from Katie Hendricks, and she's asking, do we have any idea of the available local lenders? So any advice on where to find local lenders?
Well, I think most all the banks and credit unions are doing it. Now, I'm speaking just, that's a guess, but I think I have heard. Now, I will say, the community banks were able to start last week. The non-community banks like us started on Tuesday, and we opened up. But everybody is opened up and doing it. And there are some non-bank lenders that are actually available to do it. I think you can probably go online and see, but I would be surprised. I think I've talked to most of my other competitors around town, and they're all doing it that I know of. I don't think there's anybody who's not doing the PPP program in your banks. I would strongly encourage you to talk to them, because you can talk to their banker, you can talk to them one-on-one. They understand your situation. Now, I'm probably giving a plug for the banks versus the non-bank lenders, but I think that's what I would do if I were you.
Yeah, I don't have anything to add to that. I think you can is checking with your banker and getting online, and you probably can verify pretty quickly whether someone's is participating as a lender under the PPP too.
One of the questions we had. You don't necessarily, if you did it with Pinnacle the first time, you don't necessarily have to go to Pinnacle the second time. We've got a lot of people that we're doing it, the second one, that they did the first one somewhere else for various reasons. They may have moved their business, etc. So it doesn't have to be. I will say it's easier in our case because we've already got your information in the portal. But we have done a number of new companies that have moved their business to us, and that we've processed their PPP too.
Awesome. So we have another question. How expedient should we be in applying for this round? Do we expect the available money to be gone pretty quickly?
Well, I'm going to guess on that. I've got to be very careful as I say this, but because the big guys are not eligible this time, it doesn't appear that the money's going as fast as it did the first time. I mean, in our case, we had probably only 10 to 15% of our people got the money the first round, and then they did a second round, and that's where we did most of ours. I don't see that happening this time. We did get a report from the Tennessee Bankers Association that like after the first day, there was $5 billion. The first day that all the banks could get in, only $5 billion of the $284 billion had been committed. So I don't think it's as fast as it is before. Now, please don't quote me on that, because if you get out there and you wait, you'll get the money. Don't blame me. But, you know, I wouldn't be surprised if it would be like last time. If the money ran out, I wouldn't be surprised if Congress wouldn't re-up it. That's my opinion. Jim, you may have a difference.
No, I think it's similar. You know, they definitely have decompressed the playing field. As you mentioned earlier, it's 300 or fewer employees. And so that right away takes a chunk out of it. I do think too that you're not talking about quite the same, the big guys gobbling up $10 million like you did under PP1 at a time, or at least in excess of $2 million. Those loans, I think, are going to be not quite as frequent. And I do agree with Kenny. I think this is not the last of the program. With the change in administration in particular, there'll be some more economic relief packages. We'll see what those look like, but probably likely it's going to re-up this program where if there's the demand for it.
So it looks like we don't have any more questions in the chat. I may, I guess if anyone does have additional questions, you're more than welcome just to unmic or put that in the chat. But while we're waiting for those, I just wanted to say thank you so much, Kenny and Jim, for joining us today and for sharing. I'll let you take a second if you have any final comments, any final encouraging action, like get your applications in if needed, you know, things like that. But feel free to take a few minutes to wrap up, and we'll collect any additional questions during that time.
Yeah, I will say, you know, I think it's been easier this time. You know, we had people, you talk about time, we had somebody applied at 2:10 in the morning on the first day, you know, so some people did get in quick. Yeah, I think it's easier. The playing field has been narrowed down, and the requirements on the PPP2 have made it much easier. And then they have done a good job on the forgiveness finally to make that a little bit easier. I would encourage you to talk to your banker. You know, if you've got any questions, we talk among ourselves with questions and answers. You know, we actually have a Q&A session that goes throughout our company for questions people have. So I'm not telling you that we're experts and we're going to know everything, but I think, as Jim said before, you know, talk to your banker if you've got a question, and let them guide you. Don't be scared of it. You know, it's a great program. I mean, it's been a lifeline to a lot of businesses. So, you know, take advantage of it. You know, I encourage you to do that. But any questions you may have that you don't want to ask publicly, if you want to call me, I'll you know, you don't have to do it with us, and I'll still answer your questions. And I'm sure Jim will do the same.
No, I'd be happy to. And just similar to Kenny, would encourage everybody out there. You know, I know with PPP1, especially the early funding, nonprofits were very underrepresented in those first borrowers, those first wave. I think there was some improvement with that when the act was extended. But more recently with this, if you can meet the 25% reduction test, or think you can, have those discussions, run the calculations, and take advantage of it. Take advantage of that lifeline. Don't wait for while there may be a very good prospect that there will be future economic aid relief packages, you don't want to count on that necessarily. So take advantage of this one while you can. And yes, you can contact either one of us. I'm sure Ada can make available, or has made available, our contact. And so let us know. We'll be happy to try and answer your questions. Thank you very much.
Thank you.
Thank you, Ada.
Yeah, thank you both. And as they were mentioning, I'll be happy to share their contact information in our follow-up email. We'll also be sharing the recording of today's session. So if there was a bit of information that you weren't able to catch, you will have this recording available to you, hopefully by the end of the day, and if not, by tomorrow morning. But with that, it doesn't look like we have any further questions. I'll be happy to stay on the Zoom for a few more minutes in case you do, and we can get those questions fielded to Jim or Kenny. But thank you so much, everyone, for joining us. Have a happy Thursday, and we will see you soon.